Today's session, Ask the Experts, where you get to bring your portfolio to the table. Ask me anything you like from the entire financial universe. Could be shares, it could be foreign exchange, could be commodities, could be indices, could be cryptos, very popular at the moment, and I'll do my best to give you a quick fundamental technical analysis view on those. Keep in mind, we're going to try and limit the session to 30 minutes, so I will be fairly brief, but I'll try to get to everybody's questions through the course of the presentation. That's the formalities out of the way. We'll head over to you now. We have a few questions coming through, and we will switch firstly to the charts. And John has LRK, which is Lark Distilling. Haven't looked at that one for a little while, John. And then he's asking about A2 milk as well. Okay, and we probably couldn't get two stocks whose charts are at the opposite ends of the trend spectrum. We have a wonderful short-term uptrend here. And what I will do while we're analysing the chart, I will pull up the Thomson Reuters icon data for this particular company. So we will type in LRK, and this is not my data. This is simply the broker consensus data that comes from Thomson Reuters, and it will, if we have the data, it'll populate these fields, and we can see, for example, when it comes up, you'll see previous financial years, and then we've got broker consensus forecasts for coming financial years. And then I have my own little bits and pieces in here that I use on that data to make valuation decisions based upon that. So that's lighting up in the background. In the meantime, long story short, if I had this stock, I would certainly hold on to it. I can't see any reason why you would be panicking out of this one. Having said that, it's probably, given this big pop-up, more prone to a little bit of a pullback, maybe even into sort of the low fours into the high 390s before it steadies around this short-term uptrend and then at the very least would go sideways. But yes, if I had it, definitely a hold. If I didn't have it for the same reasons, that it might be prone a little bit more to a pullback than to continue the current rally, I would be waiting for that pullback and signs of a reversal in this zone. And you might get it a little bit cheaper than where it is. Otherwise, it looks fantastic, and I certainly can't fault this one at all. At the other end of the spectrum is another very interesting stock here, which is A2 Milk. So we have had a reasonable recovery, and we're looking for volume and volatility signs that the worst is over and that the big money is moving back into the market. Typically, we would see at the low or somewhere very near the low, a large spike in volume, telling us a couple of things: that people who got in on this drop here because they thought it was very cheap and it was going to rally back up and they got a bargain, or people who got in at this drop here, or potentially even this drop here, that they'd given up. You know, you really want those speculative bargain hunters to give up. You also want your short sellers to cover back their shorts as well. And that is a great indication that the downside is probably limited. So if the shorts are out, maybe even the shorts start to buy. That's very interesting. So the only way all of those things can happen is via volume, is via transactions. You know, when you cover your shorts, you're buying back from somebody hopefully who's panicking out as a seller. So we like to see these volume spikes come in to indicate this big transition. Then we would typically see volume decrease over a period of time, hopefully also as the price starts to recover, indicating that big supply that was plaguing the market is out of the market and we're more in an accumulation phase. It's got some of those hallmarks to it, but not enough to really make me confident that we have seen the big low here. Having said that, with the price action moving back into higher peaks and high troughs and the short-term trend starting to edge to the upside, it's all about probability. The probability that this is the low increases. Now, let's get to the point. Where could I buy it? Could I buy this one? It's tough. It's tough with this very well-entrenched long-term downtrend. It's tough given there's going to be resistance all the way up. If you are really aggressive, and I think that's where some people want to be really aggressive on this because they feel that it was 20 and now it's 7 and it's going to go back to 20. I don't think the market works like that. But I would be looking at least for a break of this high here, which is 738, but probably really 754 is probably the safer place to go. So if we start to get above that level, and with the volume set up being probably 80% correct for a significant low, that's the earliest I personally would get involved in it. The valuation's not screaming a bargain down here, but it's not screaming that it's crazy expensive either. So, you know, that's a 50-50. But 754 would be the key. If you had it, I think there's enough in it based upon what I'm seeing, that 504 could well be the low to hang on to it. If I didn't have it, then that 754 is the earliest I could look at it. Okay, I promised we'd look at the fundamentals for Lark Distilling, and we will do that. Now, we don't have a lot of broker data for this one simply because it's a fairly new company, but we do have some numbers here for FY 21, 22 and 23. This is telling me to check my FY. It's a little bit different from last time you might have seen this because I'm always playing around with this fundamental analysis tool and trying to improve it. Sometimes I make it better, sometimes I make it worse and I have to go back and try and make it better again. I don't think we're probably here. I think we can probably go mid there. And amazing growth rates here. So expected growth for FY22, 718%. These are not my numbers, these are broker consensus numbers. But having said that, we've only got 2 brokers in our consensus. Okay, they're both a strong buy, so they're probably quite biased to the upside. So when we look at this data, this raw data, we then need to just understand how it's come to be. Then they're going 116% for FY23, and then the very simple arithmetic average of that is 417%, which then falls into here, long-term growth estimates. The current PE is a little bit astronomical at 484 times, but with the growth here at 417 times, it is probably justified, making it still technically, if it can achieve that growth, still actually fairly cheap. I mean, it's so off the charts at 412 that it's beyond bargain at this stage. Now, this is where this custom growth comes into it. So this is where I can adjust things a little bit. Let's take those off because we don't have them, but we can leave that off anyway. And we might say, okay, well, let's assume that growth isn't 417%. Let's say that these brokers are a little bit optimistic, and let's say it's more like 75% per annum instead, which is the most incredible growth rate there is. And we start to see that these numbers start to change a little bit, don't they? Okay, so in this case, the stock would be more than fully valued because of its crazy high PE. And I don't know this one enough to make an educated guess on what this number should be. And that's typically when I would go and do the full research on the company. We don't have time for that today. And this is the key number. What is the market pricing this at? One way to do it is to keep going until you get sort of fair value equaling the last price, because one thing you can fairly safely assume is that the market, if it is efficient, the share price is the current fair value. And then you can kind of work backwards and say, well, at a 200% growth rate, no, that's too high, 150, that we're at 3, so we're pretty close there. So the market is kind of saying 55, that's pretty close. I mean, you go 154 and get it. Be silly here, but that's probably close enough. So forgetting what these 2 brokers, and we've only got data from these 2 brokers, forgetting what they say, the market price is saying the market is expecting 154% average growth over the next 2 to 3 years, which is that's my time horizon, investment horizon. So you then need to go, well, that's pretty good. Based upon my analysis of the company, I think that's a reasonable expectation, or I think that's too low. And if you think the market's estimate of growth is too low, then you're more like having a bargain on your hands, for example. Okay. If you think that there's too much risk involved in that, you think, geez, there's a lot, they probably could get there, but there's a lot of risk in them getting there, and then your growth estimate is lower than that, then the stock becomes overvalued. So it's not the sort of analysis we can do in the short time we have, but it is. Hopefully, this session is also about equipping you with the tools and I guess the understanding of how to do some of that analysis yourself. I think we've covered those 2 pretty well for John. Let's move on to OZL for Craig. And this one is a little bit concerning for me because it is starting to threaten a break of that long-term uptrend zone. We can see how we've interacted with that zone and it was supporting the price, but we're just starting to move through the bottom or challenging the bottom of that at the moment. That's not necessarily a deal breaker, but it's certainly not a great sign. So it's a little bit concerning. I might get the fundamentals going for this one. And copper and gold, of course, Oz Minerals, 2 underperforming commodities over the last few weeks. And I think that's why this one has been pegged back a little bit. Short-term trend is down, long-term trend's under threat. I'm getting a bit nervous on this one. I needed to see it bounced pretty quickly. $20 if it started to print below that, I'm getting a little bit worried. Yeah, so you can probably tell by the the concern in my voice that this one is looking a bit shaky. We don't like to see trends break down like that because, if we go back to A2 Milk, that was a fantastic trend as well. So we can't fall in love with our stocks. I think that's a foolish thing. They're really there to do one thing for us, and that is to give us better than market returns. And if the probability of that is lower, then getting a better than market return, then we might well have to turf out of it. And if we look at how trends break down, and we're only looking at a sample size of one here, but just to demonstrate how the interaction with that long-term trend zone works. And we often find that the zone supports price, and pullbacks to that zone are buy opportunities. Until we get pullbacks with these really black and nasty candles, we hit that level, we don't bounce quickly, and we then start to fall through it. So that is my concern for Oz Minerals. I'm not saying that's guaranteed to happen with Oz Minerals, but it can only happen if supply is greater than demand. And if supply is greater than demand, people know more than us about this stock. Let's head over and have a quick look at the fundamentals for Oz Minerals. And we have quite a few brokers covering this one, so we can take a great deal more confidence in this data and this valuation we can come up with compared to the previous one. And we have, however many, 10, 16 brokers with an average rating of a buy. There are only 3 sells in there, but mostly quite positive. We have an average price target of 24.27, which is considerably higher than the current price by about 16.6%. It's trading on a current PE of 15.9 based upon our numbers, and brokers are looking at a growth rate of about 5% going forward, which I don't, and I do know this one pretty well. I don't think I disagree with that, so I don't think I would, certainly not going to put under a 54%, but we'll turn that off and just go with the consensus here, and we'll probably go mid on that one. And look, and this is where sometimes the fundamentals and the technicals can diverge, and certainly it's not my opinion. This is broker data. It's got nothing to do with me. It's looking fairly good value at current prices at $20. It's looking like good value here. So whether you want to go on that, and again, I can only give you the numbers and help you to make your decision, or you want to go on the chart. Certainly we're not looking expensive, but the chart is looking a little bit shaky at this point in time. So hopefully that helps you out there, Craig. Let's type in Novonix. I'm not sure if I'm going to get a lot of data on this one, but we can certainly try that out. NVX, and we'll head over to the chart while that's loading up, and NVX. Okay, so this one actually looks pretty good. We can see the interaction here with the long-term trend zone, how often we see it supports price going forward. We do like to see it get out of there pretty quickly. One thing that strikes me about this one, and I don't know if you notice it or if your eyes sort of train to it, is just the number of black candles in here, and it just speaks to me that there is a fund or a fund manager there that is just sneakily selling these sort of each day. I mean, they've got an order to fill, and they've got a price that they've got in mind at probably around $2, and anything above $2 they're happy to sell. And this one is Warren. So Warren, if you've got this stock, maybe you do, you've probably watched it, you've probably felt that, you probably had that feeling of, geez, this thing just can't get going. It looks good in the morning, and then by the end of the day, it just looks rubbish again. That's what those black candles represent to me. Now, that's technical analysis is driving by only looking in the rearview mirror, right? We can only see the past, we can't see the future. So then we're looking for signs. Okay, well, are there signs that pesky seller, that just nagging seller is have we got rid of their supply? Have we given them the cash they require to be out of that position, and therefore we can move higher? And that will come to us in the form of white candles. And this is very interesting here. And the fact we've got some volume here is also very encouraging as well. So, and then we do want to see after this volume spike, volume decline, because it tells me that we're in a supply vacuum. So this is very interesting because we've had this pesky seller working in the market. There's potentially some news here, and honestly, I'm not 100% familiar with this one, so forgive me if I don't know what the news is. I'm sure you do. And we've seen a little bit of a changing of the guard here. It's not unusual after such a run-up to see a pullback here, and if I see black candles like that, typically they're not great, but within the context of these white candles, we can probably forgive that one. And a pretty good move today in a terrible market, coming back, pulling back to this short-term uptrend in a long-term uptrend. I think this one looks very interesting. I think certainly if you had it, you are hands down compelled to hold on to this one because something is very interesting here. If you don't have it, this is very close to a buy here actually, just based upon the price action today, pulling back to that short-term uptrend. So I like to see pullbacks in long-term trends and back to the short-term uptrend zone with strong candles off that zone. After a volume picture like this, this one looks very, very interesting for me. So if you had it, 100% you must hold on to it. If you don't have it, it's probably a cheeky little buy here, but it's one of those probably high-risk plays, given the number of black candles we've had here. I mean, that seller might be back tomorrow, but just on the indications I can see here, maybe that they won't be. Maybe we've turned the corner there. Let's see if we've got some fundamental analysis data on Novonix. We do have a grand total of one broker, I think, covering it there, and they are optimistic. They do have a buy on it. Their price target is $3.70, which certainly provides plenty of upside from the current share price. There's just not, I don't have enough data. I don't have a PE, in fact, for FY21, so that's breaking this one. And we're not going to have a profit until FY23. Okay, so it's breaking this. It doesn't mean it's a bad company. It just means that my valuation model is, to be fair, it's directed to companies that are going to make money this year and beyond, or at least from next year. So without that PE, I can't really give you a valuation. But certainly if we look at some things we can see, for example, growth rates are expected to be very, very high. So that's encouraging here. And we will get cash flow positive and earnings positive in the not too distant future, so a couple of years from now. So, there's nothing in the fundamentals necessarily to tell me that it's completely awful there, but I can't give you a full recap of that one, sorry. But hopefully the technical picture is enough for you, Warren. Okay, moving down the list, we're on now to M7T, which is Max 7 Technologies for Helen. Oh, that doesn't look good. I don't like that. Had a good announcement this morning. Helen, I haven't seen that announcement this morning. Apologies, I'm not across every stock out of the 2,500 stocks, but I'm not so sure how good that is just yet. I mean, this is an intraday snapshot. It was taken at the 9 o'clock candle, and if I go here and refresh my data, we'll see if that's changed any. If this is a good announcement today, Helen, what we will see is that the price will recover. No, we see how that black candle just got blacker. If it is a good candle, if it is a good announcement today, what we will see is that the price will recover, that demand will come in to overwhelm the supply in the market to push this candle into closing something like, and I'll draw you a picture. So we'd like to see typically a white body. And now this is going to come down to my skills of drawing here. Let's try that again, because that'll draw that. And imagine that's a white body, and we're going to draw a line down here. So it would look something like that. I'm not sure if we're going to see that today, but look, if you see that, then it would be a good announcement, regardless of what you think. It's more about what the market thinks. So if we see that, the market thinks it's a good announcement, that's the best way to put it. And then I would think, based upon the huge volume spike we've seen over the last 2 days, there would be a very good probability, not possibility, probability, that we are seeing some sort of major low here, because it's not far off this one here, and these are the sorts of candles, Helen, we'd like to see, we'd prefer to see. So lower shadows, that's the sticky bits, that's this bit here, pointing down, and then white candles, confirming those lower shadows. That's the body part. That's this bit here, and the longer the better. So if we start to see this pattern here, over here, that's a good sign. Okay, but it's too early for me to tell. And the volume is constructive if we see that pattern, that we could see a big low. What I can say, not predicting the future, is looking at the past, the trend doesn't look good. I mean, we've turned the corner here. We've gone from a long-term uptrend into now really that long-term trend, I have to say, is now down, because we've got compression in the moving averages. We're trading beneath that zone, and worse than that, that zone is no longer supporting prices like it has in the past. I'm talking, here and here, where the long-term trend zone supports prices, to now that long-term trend zone is really impeding prices on the way down, as is the short-term trend. So look, if I had this one, Helen, I'd be very, very concerned if I don't see over the next few days that turnaround that I've been talking about. Then I think there's better opportunities for your money elsewhere. Okay, so that would be my my view on that one. What I will do for you though, Helen, also is I will put this one in our fundamental analyzer and see if we've got enough data to make a good decision on that one. And as you can see, the 3.1, it's the latest version that I'm using based upon my my shenanigans here. And we might find that without the PE here, we're struggling on that one as well. So not making money yet, Max 7, and probably won't until FY23, much like that last one we looked at, Novonix. Okay, nickel mines, which up until yesterday looked really fantastic, and I was getting very excited about nickel mines. And then we've had a couple of terrible days. Let's have a look at the nickel price. If we're going to talk about a nickel stock, let's look at the nickel price, and we'll go line. I think that looks really constructive. We know what happened here, Warren. Obviously, this was that announcement by Tsingshan Holdings, which is actually Nickel Mines' partner there in their Indonesian operations. They announced a new process for turning nickel pig iron into nickel matte. Nickel matte is the type of nickel that the electric battery manufacturers, that's the one they want. So basically you go from having a nickel pig iron, which is obviously very plentiful, to the nickel matte, which is the one which everybody wanted. You've all of a sudden got a huge amount more supply of the good stuff than you thought. And that really knocked prices around. But, I think this is really constructive. The way prices held, again, in that long-term trend zone, I don't make this stuff up, and then push back off. And this is the kind of price action you want to see, maybe for Oz Minerals down the track. And I think that the price action for nickel is very, very constructive. So that's the first thing I'd say about nickel and nickel stocks, which if you've been listening to me on Ausbiz, you know that I like. Let's have a look at copper. So now we're talking Oz Minerals. Now we're talking a little bit, we're talking BHP, Sandfire Resources, Rio Tinto, obviously, our big copper miners. I say a little bit because iron ore is still the main gig for BHP and Rio. And this one doesn't look so good, does it? We're in a well-defined short-term downtrend. Compare that back to nickel's well-defined short-term uptrend. But we're still in this long-term uptrend. We're still holding some support zones, but we're coming under pressure. And it just feels to me that Oz Minerals is probably underperforming the copper price, but don't forget Oz Minerals has a bunch of this other stuff here, which we're about to see, which is the gold price. And if you've been listening to me long enough, you know I'm not a gold bug. And looking at the chart, it's hard to get excited about this. So I think Oz Minerals suffering a bit from weakness in both of those key commodities. I don't think the outlook for gold is screaming buy, but there is enough in there to say neutral to up, probably mildly up in the near term. We were talking about nickel mines. Let's head back to that and have a look at the chart, and I will get the fundamentals going on that one for you in a second. Flip back to auto there. I was quite confident a few days ago that if we could break through that, I was looking at sort of 112, but maybe if you wanted to be safe, sort of 115. If you wanted to be really safe, maybe even here. But I still think this is going to get going. I still think it'll catch up. We're just in a pretty weak market over the last two trading sessions, and maybe that's got more to do with it. If I'm wrong, however, and it doesn't tick up, then 95.5, if it would break below that, then all of those things we've talked about, long-term trends changing, come into play, and it's looking really, really scary indeed. There's enough for me to hold it if I had it. I can't buy it now, and 112 is the earliest you could buy it. If you're a bit more conservative, then probably 120 is the print. Okay, ACDC ETF, let's have a look at that one. It looks constructive. Being an ETF, I'm less concerned about the colour of the candles here because that's more about market makers, and we just tend to find prices tend to be best in the morning and then worst in the afternoon. So you probably factor that out because it's an ETF. And focus more on the trends, which are, let's face it, it is flattening. And one thing we have to read as technical analysts is just demand and supply, and this is a clear demand side market here. High peaks, high troughs, moving averages expanding, they're supporting prices, and then we start to really interact with the moving averages a bit more. We go from angles of attack like this, to this, it just starts to flatten out and probably looks like falling dominoes, which is not a good sign. And then we move into this sort of equilibrium phase. And, if we start to break down here, then we would be in that supply. supply side market, and that's the one we don't want to be in. So look, long story short, for the time being, there's probably enough in it to hold it. It's not shooting the lights out fantastic in terms of what the market's telling us. So, supply and demand are fairly equal at the moment. If it was, if the outlook for these stocks were amazing, supply and demand wouldn't be equal, because the people who are supplying wouldn't want to supply. And the people who are demanding would be even more desperate to demand. We're not seeing that. But, until it breaks down, I think you can give it the benefit of the doubt. Let's have a look at nickel mines on the fundamentals. We do have a PE here of 12.61, and we're expecting about 34% growth, which means if we go off, and mid, even if we said low, let's see what low says. It looks so cheap. It just looks so cheap. I mean, it's crazy bargain prices on nickel mines. But again, beauty's in the eye of the beholder. And if the market has it wrong, if the growth is not going to be 34%, this is where this custom comes in. So I can go, well, let's have a look. Let's see if maybe growth isn't as bad as we think. What if we have 10% growth? And then you have to say, well, I'm pretty confident nickel mines can achieve 10% growth based upon the way it's increasing its production, based upon the fact that nickel prices, I think, are going to be higher over the next couple of years. I think, and we're way more conservative than the market. And then we're still at pretty good value. We're still at pretty good value, even if that's the case. And we're certainly better than fair value. And as we start to ratchet this up, depending on how optimistic you want to be, the numbers get better and better. So it's one of those frustrating occasions, Warren, where the fundamentals and the valuation for nickel mines looks fantastic, but the chart continues to be under pressure for whatever reason. And we can't know the reasons. We're one person in a huge market. We have AVA from Lee. Oh gosh, and we're going to another stock that looks really cheap but just hasn't fired. The technical picture is actually looking a little bit constructive here, because we did flirt with this breakdown, and we did get there. And to be fair, it's gone from mid 40s down to as low as 30s. But we're seeing a fairly nice turnaround here, and I like this. This is a really constructive price action. So it doesn't matter what I think about the stock. It's about whether we are seeing more buying on those dips and less selling on those peaks. And think about what that means. More buying on the dips, less selling on the peaks. So more buying when it goes down, less selling when it goes up. What a great sign that is, that people are accumulating this stock. Now let's flip it around. So we've got more selling on the dips, on the panics, and then less buying on the way up. More selling on the dips when there's panic, and less buying on the way up because it doesn't look cheap. And that's probably what it was through here. Okay, but we're turning the corner here. This looks really, really interesting. I wish it hadn't broken through this little trough here, again, because we want to see more buying on the dips, and we haven't seen it here. Constructive candle today. I think it might have been Helen who was asking me about Max 7, and that was a big black candle today. And I said, you want to see a lower shadow, preferably a larger lower shadow than that one. It's only a little one, but still that's constructive. Back to the short-term uptrend, which isn't an uptrend, that's nice. And then we're interacting with this long-term trend zone, which is flittering with going back to up. Look, I think if this one gets back above, I'm going to give you a number here, 48.5, if you're a bit more conservative, you might want to see a 5 handle, so something with a 50 on it. Then I think it's looking really, really good. And we do know it's cheap. So when you get a combination of a nice chart with a cheap stock, that's when the technicals and the fundamentals come together and hopefully give you something good. So we'll type that in there, and we'll see how much data we've got for it. It's not widely covered, unfortunately. As you can see, we've only got literally the one broker that's covering it, but we do have a PE, so we can get a valuation for this, which is nice. I wish I had more data here. But I think that's a low estimate anyway. They're doing better than that. So I mean, let's just put 10 in there and be really conservative, and go up here, and we start to get silly cheap multiples for this one based upon what they're doing. So I think it's a very cheap stock. It just we just need the market to realise that. And you can see how little coverage there is, and maybe that's part of its problem. And we've done AVA, now we've got Novonix, Bippen, I've done that one previously, hopefully you saw that, and a VUL, which is Vulcan, so this is for Hamid, And let's tick the boxes here. What do we like to see? We'd like to see short-term uptrends. That means shorter-term traders, people who don't want to hold this thing for 10 years. What do they think of the stock? Are they buying the dips? Are they selling less than the rallies? I think that's the case. We've got these high peaks and troughs coming in. And what we're seeing also, I think, is a nice return to white candles here, putting the last couple aside. Long-term uptrend, it's fantastic. Great basing pattern. And it's not unusual to see this sort of a pattern occur after such a huge spike, because the market gets ahead of itself. Crazy, silly stuff, $0 to $14. You have to expect a pullback and potentially a halving. In fact, this one was almost a third of its price at one stage. But we're moving well since then, as the market, I guess, is moving in a more sensible, more rational fashion. I like this huge volume build up here to get the trend going. And then typically I'd like to see the volume really dissipate once we remove that supply overhang. So what we've got is a bunch of traders who are stuck in from here. Okay, so we all know the feeling. We got a bit excited. We were believing the hype. Maybe it was just supposed to be a day trade. Maybe we bought it at $10, thinking we can sell it at 11 and make a quick profit. But then it got to 12. We thought, no, well, I'll hold on for 13. And then it got to 14. I said, no, I want 15. I'm not getting out until it gets to 15. And then it got back to 14. You said, oh, well, if it gets back to 15, then I'll get out. And then it got to 13. I said, well, geez, I should have sold that at 14. If it gets back to 14, I'll get out. Then it got to 12. And then you adjusted your exit down to 13, never got there. And then it got back to 11, and then it got back to 10. Oh, I'm breaking even now. Oh, now 9, I'm losing money the next day. What was supposed to be a day trade ended up being a huge mistake, and we're in it for the long haul. And that just creates supply overhang, because you've got people going, geez, please God, if you just let Vulcan Energy go back to $10, I promise I'll get out and I will never trade again. And the only way to get rid of that supply that's been stuck in it for however long is to trade with them, and that's volume. So you need the volume to push to start a new trend. And basically, we're getting rid of that supply. The great thing about getting rid of that supply is you've given them a bunch of money, and now the stock's going up, and they're wishing, why did I get out of Vulcan? I mean, I knew this was the one, and I got out at break even. I need to get back in because I've got all this cash now. If demand falls after that, we know this supply is out of the market, and if price is going up with low volume, it just means that demand is not finding supply, and it's prepared to pay higher prices. That's the key. If price is going up strongly on low volume, most technical analysts will say that's a bad sign. That's just because they don't understand price and volume. If price is going up strongly on low volume, it is because there is plenty of demand out there. There's just no supply, and the demand is so desperate to get in. They're chasing higher and higher prices. Let's see what happens from here. This candle here and this candle here, a little bit disconcerting, but I know that one happened on a bad day. It's encouraging to see the pullback to the short-term trends with a reasonable candle today. I'd love to see that close higher. If that closes towards the high today, I'd say this is a cheeky buy as well, like Novonix. I think we're at the start of a new trend, a new uptrend that will take it back towards those highs, but nothing goes up in a straight line. Sorry if I took too long on that one, but it's a very interesting chart, and I like to talk about interesting charts. This is another interesting chart. Look, trends are fine here. We are maybe flattening out a little bit, but look, there's nothing too sinister in there. I'm looking at price and volume to suggest that we can't keep going up on that one. That's an absolute hold for me. And if you're looking for one of those portfolio buys, I'm pretty happy with that as well. Assuming the valuation checks out, we can check out the valuation on that. I don't think I'm going to get a valuation on Vulcan for Hamid because I'm quite certain, in fact, I'm absolutely sure it doesn't make any money yet, and I can't value something that's not making money. So let's go to James Hardie because I know that one is making money. And we do have a number of brokers covering this one. It's fairly widely covered stock. We do have 2 strong buys. That's encouraging. 5 buys, 2 holds, 1 sells. A little bit disappointing. We have an average price target of about 45, 42, which is, to be fair, about where the stock is trading right now. So the market's expecting about low double-digit growth, which I think is perfectly reasonable. It's a perfectly reasonable assumption for James Hardie given their track record and I think what they're going to do. So happy to defer to the market's wisdom on this one. We're seeing a fair value around about 48.74, which is again providing some upside from the current price. So you certainly wouldn't say it's all that expensive, but it's hardly what you'd call a bargain. either at this price. But it's a good solid one when you get a fairly comfortable valuation in combination with a nice chart, then there's every reason why you'd hold on to that. Or, as I said, if you're sort of a portfolio investor looking with a longer term time horizon, look for a blue chip stock to add to the portfolio, then perfectly acceptable on this one. Very interesting bunch of stocks to look at today. Okay, Lee's got in. We're going to do one more, MVP. Oops. Yeah. I wish I could say some nice things about this one. We talked earlier on about this idea of when prices are down, there are fewer buyers. Normally, if we go to the shops, right, let's say we wanted to buy a pineapple. I love pineapples. And pineapples were normally $4 each. And we walked into Aldi or Woolies or whatever it was, and pineapples were on sale for $1. Now, if you're like me and you love pineapples, that's a bargain. You wouldn't just buy one pineapple, you'd buy a bunch of pineapples, right, and take them home. Unfortunately, stocks aren't pineapples. When the prices come down, that doesn't necessarily mean that they're a bargain and you should buy more. And what's frightening is when the price does come down and people aren't buying more. In fact, they're buying less. And when the price does go up, and in theory, you would think that price has gone up, that should give people more confidence to hold on. In fact, they don't hold on. They actually sell into those rallies. That's really concerning. So, yeah, let's just say MVP is not a pineapple. Let's have a look at the valuation for MVP, if we can get one. MVP is not a pineapple. I guess we don't have a PE. We're not making money. Yeah, look, this is iteration 3.1 of my valuation tool. Don't worry, iteration 3.2 might well, this is brand new. I'm literally working on this morning. Iteration 2 might well have a few tweaks and a few fudges to get around this idea of not having earnings now, but maybe having earnings down the track. But if you're not expected to have earnings for the next 3 years, it's pretty hard to give you a valuation unless I go do the full research at the company level, and we don't have time for that here, and that's not what this tool is designed for. It's designed for a quick, ready reckoner. Okay, so I can't give you a valuation on MVP, but I think the technicals say it all. If I had it, I'd be really concerned. If I didn't have it, I'm not looking to buy it here, that's for sure. Okay, everybody, that's it for today. Look, hopefully you enjoyed it. I certainly enjoyed it. Quite happy to look at stocks and chat stocks all day, but we must put an end to this, unfortunately. But we will be back in 2 weeks' time for the next Ask the Experts. Make sure you tell your friends, because everybody's welcome to this one, okay? You don't have to be a client of Think Markets. Hopefully you do become one, but certainly tell your friends, and they can bring their portfolios along as well. Next Tuesday, however, we'll be continuing with our Think Learning series of educational webinars, where we're going to have a look at the turtles trading strategy. And what's going to be neat about next week's webinar is you're going to walk away from that with a trading strategy that made, I think it was $175 million back in the 80s. Okay, so I'm going to give you the exact strategy as the turtles traded it. So we know it's widely successful. It's still a very, very, very interesting, very reliable model. And what it can give you is the ability to not have to rely on talking heads like me, but to be able to make your own sensible and independent decisions based upon price action in the market. So definitely tune into that one. That I would say is a not miss. Then the week after, we're back to Ask the Experts, and then we're into our top 3 series again. This time I thought I'd do top 3 ASX travel stocks and a travel sector review, fairly relevant given what's going on with lockdowns. You can register for all those webinars right there. If you are watching me on YouTube, make sure you hit the thumbs up button and subscribe to stay abreast of all of our equities research alerts, and no doubt there'll be some links somewhere here to the next webinar and the next webinar for you to watch. Thanks for joining me today. All the best for your trading until we catch up again. Bye-bye for now.